Did you know if you had invested just $1,000 in Bitcoin back in 2013, you would be sitting on a fortune today that could rival the GDP of a small nation? This isn't just a financial asset, it's a technological revolution that has challenged everything we thought we knew about money, value the very nature of ownership. As we stand here on September 1st, 2025, the questions swirling around Bitcoin are more intense than ever. Has it truly become the digital gold it was touted to be? A safe haven in times of economic uncertainty? Or is it still the wild, untamed frontier of finance, promising immense rewards but carrying equally significant risks? The narrative is complex, filled with institutional players, regulatory headwinds, a global community of believers and skeptics alike. Over the next 1,200 words, we are going to unpack the state of Bitcoin in 2025. We'll dissect the current price, explore what the sharpest minds in finance are predicting, and navigate the shifting sands of global regulation. This isn't about hype or fear. It's about providing you with the clear, actionable insights you need to understand this transformative asset. The financial landscape is evolving at a breakneck pace, and staying informed is no longer optional. It's essential for anyone looking to preserve and grow their wealth in this new era. As of this morning, September 1st, 2025, Bitcoin is trading in a fascinating yet volatile range. After a remarkable run-up in late 2024 that saw it test previous all-time highs, the price has entered a period of consolidation, hovering around the psychologically important $115,000 mark. This price level is not arbitrary. It represents a confluence of technical indicators and market sentiment. The primary driver behind the recent surge has been the continued institutional inflow following the success of spot Bitcoin ETFs, which have now been trading for over a year and a half. These regulated financial products have provided a secure and familiar on-ramp for pension funds, endowments, and corporate treasuries, fundamentally changing the demand-side dynamics of the asset. However, the current price is also being influenced by a delicate balance of macroeconomic factors. The Federal Reserve's recent signals regarding its monetary policy have introduced a layer of uncertainty into all risk assets, including Bitcoin. While inflation has shown signs of cooling, the Fed's higher for longer stance on interest rates means that the cost of capital remains elevated. This environment typically favors less risky investments, creating a headwind for assets like Bitcoin. We are witnessing a classic tug-of-war. The powerful tailwind of institutional adoption is clashing with the challenging macroeconomic backdrop, resulting in the sideways price action we see today on the charts. Another critical factor influencing the price is the aftermath of the 2024 halving event. This pre-programmed event, which occurs approximately every 4 years, cut the rate of new Bitcoin creation in half. Historically, halvings have been followed by significant bull runs as the reduced supply meets steady or increasing demand. Looking toward the remainder of 2025 and into 2026, the spectrum of expert predictions for Bitcoin remains as wide as ever. Yet a consensus is beginning to form around a decidedly bullish outlook. Analysts at major investment banks have adjusted their models to account for the structural shift caused by spot ETFs. For instance, a recent report from Goldman Sachs projects a conservative price target of $150,000 by mid-2026. Their thesis is based on modeling Bitcoin's potential to capture a small but significant percentage of the global store of value market, currently dominated by gold, which has a market capitalization exceeding $15 trillion. They argue that as digital natives inherit wealth, a portion will naturally flow into the digital gold equivalent. On the more optimistic end of the spectrum, you have well-known technology investors and asset managers like Cathie Wood of RK Invest. Her firm has consistently maintained a long-term price target that extends far beyond the six-figure mark. Their latest research, published in July 2025, reiterated a base case scenario of Bitcoin reaching $1.5 million per coin by 2030. This forecast is not based on simple speculation, but on a detailed analysis of multiple use cases, its role as a global settlement network, a hedge against autocratic regimes, and a cornerstone of the emerging Web3 economy. While such a price may seem astronomical, their model breaks down the total addressable markets Bitcoin could disrupt. Of course, not all predictions are so rosy. There are still prominent skeptics who caution that Bitcoin remains a purely speculative asset with no intrinsic value. Economists like Nouriel Roubini continue to warn of a potential regulatory crackdown that could severely cripple the network. The asset's notorious volatility makes it unsuitable as a true store of value or medium of exchange. The global regulatory landscape for Bitcoin in 2025 can best be described as a complex patchwork of evolving rules with a clear trend towards greater clarity and integration rather than outright prohibition. In the United States, the most significant development has been the ongoing implementation of the Financial Innovation and Technology for the 21st Century Act, or FIAT 21, which was passed in late 2024. The law provides clarity on which digital assets are to be regulated as commodities by the CFTC and which fall under the SEC's purview as securities. By officially classifying Bitcoin as a digital commodity, the Act has removed a massive cloud of uncertainty that had long suppressed institutional investment and development in the country. Across the Atlantic, the European Union is now fully operating under its Markets in Crypto Assets, or MiCA, regulation. This comprehensive framework came into full effect earlier this year, creating a single harmonized market for crypto assets across the 27 member states. It provides clear rules for exchanges, wallet providers, stablecoin issuers, enhancing consumer protection and financial stability. While some in the industry initially feared MiCA would be overly restrictive, it has largely been embraced for providing the legal certainty businesses need to operate and innovate. In Asia, the approach remains more fragmented. Hong Kong has aggressively positioned itself as a global crypto hub, authorizing spot Bitcoin ETFs and authorizing spot Ether ETFs while actively courting digital asset companies from around the world. In contrast, mainland China continues to maintain its strict ban on cryptocurrency trading and mining, though it remains a world leader in developing its central bank digital currency, the digital yuan. The overarching theme for 2025 is one of legitimization through regulation. The most profound story of Bitcoin in 2025 is its accelerating integration into the very plumbing of the traditional financial system. The launch and subsequent success of spot Bitcoin ETFs in the United States in early 2024 was merely the opening act. Today, we are seeing major wirehouses and brokerage firms, which initially offered these ETFs with caution, now more actively marketing them to their vast client bases, high net worth individuals, retail investors. Financial advisors are increasingly being trained on the asset class, armed with research and allocation models to discuss Bitcoin with their clients, not as a speculative fad, but as a legitimate component of a diversified portfolio of real estate commodities. This integration extends well beyond simple investment products. We are witnessing the tokenization of real-world assets on blockchain networks, with Bitcoin often serving as the base layer collateral settlement asset. For example, major asset managers are now experimenting with pilot programs to issue tokenized versions of money market funds on public blockchains. This allows for near instantaneous settlement and transfer of value 24/7 outside of traditional banking hours. The Lightning Network, a Layer 2 solution built on top of Bitcoin to enable fast and cheap transactions, is also finally hitting its stride. While its primary use case was once thought to be for small retail payments, its most significant impact is now being seen in business-to-business micropayments, cross-border settlements. The narrative of corporate Bitcoin adoption has evolved significantly from the early days of simply adding it to the balance sheet as a treasury reserve asset. While pioneering companies like MicroStrategy continue to champion this strategy, the new wave of corporate engagement in 2025 is far more operationally focused. Businesses are now looking at how to leverage Bitcoin and its underlying blockchain technology to improve their core operations, enhance customer loyalty, create new revenue streams. This marks a maturity in corporate thinking, moving from a passive investment to an active, strategic integration of the technology into their business models, a trend that is gaining serious traction. One of the most prominent examples is in the realm of customer rewards and loyalty programs. Major consumer-facing brands, airlines, coffee shops have begun offering SATs, the smallest unit of a Bitcoin, as rewards instead of traditional points. This has proven to be incredibly effective for customer acquisition and retention. Unlike proprietary points that are locked into a single ecosystem and often expire, Bitcoin rewards are a bearer asset that the customer truly owns. They can hold it, spend it, or transfer it, and its value has the potential to appreciate over time, creating a much stronger and more lasting connection between the brand and the consumer. In summary, the state of Bitcoin in September 2025 is one of dynamic maturation and accelerating integration. We've seen how its price is currently defined by a fascinating struggle: powerful institutional adoption, a challenging macroeconomic environment. We've explored the expert predictions, which, despite their wide range, are increasingly leaning bullish. Bitcoin is carving out its niche as digital gold. The regulatory fog is lifting globally. FIT21 in the United States, MyCA in Europe, providing the clarity needed for the next phase of growth. Most importantly, Bitcoin is moving beyond a simple investment thesis. It's being woven into traditional finance and into corporate operations. This is a pivotal moment in financial history. The convergence of technology, finance, and regulation is reshaping the world. Bitcoin is at the epicenter of this transformation.